according to this thing, I'm live. Cool. Seems to be working. This is my first time going live, guys, so bear with me. I have no idea what I'm doing. Hopefully you guys had a great day. I just got off of work. I have nothing really planned, so I thought I'd talk about my biggest loss and how that came to be. I'm hoping this thing is working. It says it's working. Anyway, hope you guys had a great day. Just got off of work, got home, cracked a beer. How is haircuts not essential, by the way? I mean, I don't know about you guys, but I need a haircut badly. Let's see if this works. So I don't think that it's sharing my screen like I want it to. So bear with me, trying to figure out how to share my screen. Oh, okay, maybe it was. Okay, cool. I think it was working. Anyway, guys, so last year I had my biggest loss of all time. I had no idea what I was doing learning to short stocks, and I've talked before about how difficult shorting can be, and I think brand new traders should learn how to go long and buy stocks before they learn shorting, mainly because when you buy a stock, the worst that can happen is it can go to zero. When you short a stock, you're using margin and it can go up forever. So if you're shorting low float stocks, which is what I usually like to trade, is low float momentum stocks, your risk is just unlimited because of it. You know, if you start shorting at $1 and it keeps going, it can go to $20, $50. You know, you never know how high a stock can go. I've seen stocks like Drys back in the day, DRYS, go literally from, I think it was around $1 or $2 to over $100. So if you're shorting that and you don't cut your loss, you can end up owing your broker a bunch of money, not just losing all your money, but owing your broker money. So anyway, shorting can be pretty risky when you don't know what you're doing. I did not know what I was doing when I started shorting last year, but I just had got to the place where I thought, hey, I'll give it a shot. I've been going long on stocks for, I don't know, probably a year and a half or 2 years at that point, and I thought it's time to start learning the other side, start learning how to short stocks. So I started taking a stab at it, and I had no idea what I was doing, so it was just a bunch of random trades. And I just so happened to get caught on the wrong side of one. Let's make sure that this is working still. I think it is. Yeah. Clear screen. Yeah. ARRY was the stock. So last year, I think it was around June of last year, I got this crazy idea that, hey, I'm going to start shorting stocks. It seems like, and I do think, by the way, that shorting low float stocks, as far as sure money goes and being the most likely play, shorting those stocks is probably the best odds setup that there is, because most of the low float stocks, or penny stocks for the most part, do go to zero or go, back where they came from. You'll see very oftentimes they're super shady companies. They have bad financials. They're not something you would ever buy and hold long term. And you'll watch them go from, they might go up 100, 200, 300%, 1,000%, and then you'll see them fade right back down where they came from the next day or a couple days later. So overall, it's a super high odds setup, But the thing is, if you don't know what you're doing, which I did not know what I was doing, you can get caught on the wrong side of that. And I did that several times with low float stocks. Got caught on the wrong side, didn't know what I was doing. When you're shorting, like today, if I were to short, I'm looking for setups and specific patterns. I'm looking to short the first red day. You'll hear people talk about the first red day. That's a stock that's been up several days, or it might be up a couple 100%. Who knows? It might be up a little, sometimes 1,000%, just crazy amounts. And then you're looking for the first red day to short. And so you'll hear people talk about first red day, short the first red day. And that's because the odds are highly in your favor that it's going to keep going red and keep dropping throughout the day. And then all you're risking off of is the high of day. So if the stock starts at $20 and is red, you'd just be risking off that $20 mark. And if the stock goes red to green, you're cutting the loss and getting out of it, because if it's going red to green, it's showing strength. You want to be cutting that loss. So that's shorting the first red day. When I short now, typically what I do is I'm just shorting off the high of the day. I'm trying to short the first red day, and I'm trying to short off, risking off the high of day. If it breaks the high of day or goes red to green, either of those two things, I'm getting out of it. But back at this time last year, I didn't really know what I was doing. I just thought I'd take a stab at it and try trial and error to learn and see how to short. So I was shorting everything that I could find that was up considerably, and I found ARRY, ARRY, and I got to go back to a year. Yes, here we are. So ARRY had news on this day here. You can see this big green candle. So it had news on this day here, and on day 2, this red day, it's a little bitty red candle there. That's where I started shorting. So I thought, hey, first red day, I'm going to start shorting it. And that's a great plan, except rule number 1 for every trader who's trading, day trading and momentum trading, is cut losses quickly. That's totally what takes a good trader and makes him a bad trader. If you're not cutting your losses, that's the biggest mistake you can make, and it's a mistake I've made, thousands of times. I'm not an expert guru trader. I've made plenty of mistakes, and not cutting losses is number 1, because then you end up holding and hoping, and you find yourself on stock twits and looking all over the place trying to justify staying in the stock, hoping it's going to come back, and it doesn't come back. It only gets worse. And this is a perfect example of that, and it's the reason I want to show it. I started shorting this first red day. Okay, I think I had like 750 shares at around $26, somewhere around there. So you're talking almost 20 grand in shares that I had when I started shorting it. It ended up going up a little bit. I know that I covered some of it, and if you cover, you're buying out of your position. So I covered some of my short position, and then I added to it up into this high, not that big of a mistake yet. And then it started dropping. Okay, I'm doing okay. I'm going to end up breaking even. I'm hoping to get out at break even. Then it has a green day. And at this point, guys, I'm going against all my rules, because I want to be a day trader, intraday trader, in and out in the same day. That was my whole plan, and it's what I like to do, and it's where I'm strongest usually when I'm going long. So at this point, I'm already breaking my rules, because I'm holding it multiple days and hoping that it's going to come back my way, because I'm underwater. I'm losing money. And, that $500, $1,000, whatever it was, loss just seemed like a lot. Okay, I'm not going to do that. So I keep holding it and hoping. Well, then it has a pretty strong green day here, and I am still being stubborn and not cutting it. It's a little bit of being stubborn, and it's a little bit of being ignorant. Probably a lot of it of being ignorant, actually, because I didn't know what the hell I was doing. So I'm just holding this thing and hoping, hey, it's going to come down. It had this huge play right here where it went all the way from 22 and touched almost 27. So I'm thinking, oh, I'm going to make a couple dollars a share. It's going to come back down because the news was pretty fluffy. It was some kind of PR, biopharmaceutical PR fluff piece that made it sound great when it really wasn't. And I read about it and studied it and was like, no, it's not that big a deal. It's going to come back down. Well, anyway, it ends up not coming back down. So then I didn't cut it. Even now, even when it's making new highs at this point here, I didn't cut it. I didn't cut the loss. I just kept holding it. Eventually it's going to come back down, right, guys? It's going to come back down. That's what you think when you're stuck in a stock, and on the short side especially, it's going to come back down. I'm going to break even. I'm going to make money. What goes up must come down. You get on StockTwits, you start reading about everything that's on there, and people are talking about how it's a no good company, and the technicals are bad and the fundamentals are bad, and it's coming back down. So you start drinking the Kool-Aid, believing it's coming back down. And then it doesn't come back down. It just keeps going up, and you keep holding it and hoping and praying that, at this point you're getting super nervous. I was getting super nervous, hey, I'm losing quite a bit of money. This is no good. And then the dagger hits, guys. This is the point right here where, it just went from bad to worse. And at this point I had cut a lot of loss. At this point I was down, I believe, to 250 shares, somewhere around 250 shares. So I had cut 500 shares of the loss throughout the course of this, and I'd taken, $100 here, $400 there, $500, $300, and kind of cut it a little bit at a time. But I couldn't grab the thought of really taking that whole loss. I just was sure it was going to come back down. I was going to break even or make my money back on all the loss that I'd already incurred on that, and that's not the case. So I went to bed. I'd been nervous all these different nights as it just keeps climbing up, and I just keep thinking it's going to curl. This has got to be starting to peak. It's coming back down. So I wake up to news that they had been bought out. ARRY Pharmaceutical had been bought out by some huge pharmaceutical company. I can't remember. It's been a year ago. I think it might have been Pfizer, but it was one of the big giant pharmaceuticals. Bought them out. So I literally wake up to over a $9,000 loss. And at this time, guys, I have like a $25,000 account at the time, somewhere around there. So almost half my account. I literally wake up. Imagine waking up and your phone or your computer, whatever you're looking at, says it's got a big red number of minus $9,000, and you're just like instantly sick, throwing up in your mouth. Like, how can this be? Like, come on. Can it really have gotten bought out? Just unbelievable. And I will say, in StockTwits at that point, I was reading StockTwits these days here, and people were talking about that it was going to get bought out. But you'll see that in every thread of every biopharmaceutical company that is out there. People are talking about how it's going to get bought out, and it's going to be this gigantic gain. And well, in this case, I just happened to be on the wrong side when it actually happened. So, and it ended up coming down a little bit. And I ended up selling or covering the position at about the best possible time before it ended up curling back up here. So I think it was like $8,800 and some dollars just on that when I covered that one position. And if you add it all up with all these other small pieces that I had taken off as it went up, I think it ended up being right around $10,000 loss on a somewhere around $25,000 at the time account. So it was completely devastating. The moral of the story is, number one, cut your losses quickly. The only reason that I'm profitable now, and I'm not saying I'm a guru, I'm not saying I'm the best trader out there or that I know what I'm doing. I'm just starting, in my opinion, after 3 years, just starting to grasp, to where I would say I kind of know what I'm doing and I know what setups I'm looking for, and I'm getting disciplined enough to only trade those setups. And rule number one, the only way I got that far is to learn to cut the losses. Now, whenever a trade's going against me, it doesn't matter, I just instantly get out of it. If you have your idea, if you have your thesis that this is going to be a breakout, and you see that it starts getting toppy and pulling back a little bit, you just get out of it. You can always get back into it, and if you run out of day trades because you're under the PDT rule, that's fine. You live to trade another day. The last thing you want to do is hold it too long and you get underwater. It's going against you and you're down quite a bit, and then you end up holding it because you can't bear to take that big loss. That's the last thing you want to do. I've been there so many times. I'm just speaking from experience. I'm in no way a trading genius, trading millionaire or anything. I'm just telling you what's worked for me and how I learned all these hard lessons, and most of them revolved around not cutting the loss quickly enough. If it's not doing what you think it's going to do, you get out of the trade quick. That's the bottom line. And that's every time I've taken a big loss, and I've taken many multi-$1,000 losses, $2,000, $4,000, $3,000, $10,000 in this case. There's nothing worse than that, and you sit there kicking yourself that, hey, all I had to do was get out of it. If I would have just cut the loss when I knew it was going against me, that would have been a $100 loss or a couple $100 loss, instead of getting stubborn and believing that it's coming back. Because 9 times out of 10, guys, it just gets worse. It only gets worse. In my experience, there's been a few times where it's come back my way, but for the most part, it only gets worse. So that's the story of my biggest loss. Hopefully you guys can take a little bit from that and learn that, I saw the writing on the wall the whole way through this trade, guys, and I still was holding. I got out of some of it, but I was still holding a big piece of it, hoping it was coming back down, and then the worst thing occurred, and the company gets bought out. And that's why you almost never will see me talking about holding a stock overnight. I used to be really big about holding low float stocks. If they closed strong, if they were closing near their high of day, then I would hold it overnight, trying to save a day trade. But I've learned over time that it's not worth it. I'd rather lose the day trade, be done with it, move on, and live to trade another day than I would risk this, because there's nothing worse than waking up to news, or if you're going long, especially on a low float, many times, more often than not, there's an offering. If a stock ends up way up on the day, a lot of times after hours or in the morning pre-market, they're going to do an offering, because those companies need to raise money, and they know that their stock is not worth the price that it's trading at. So they're going to do whatever they can to talk to a bank and get an offering done, so that way they can get the biggest value that they can for their stock price before it returns back down to earth where it belongs. So holding overnight is very risky, long or short, and I just wouldn't recommend it, even though it's really tempting when you're under the PDT, you're trying to grow your account, and I totally understand that, and I've been there, and it is, it's a super slow process, and you want to make money as quickly as possible, and I understand that, but it only takes one time, like this stock did with me, or many other times, where you can lose half your account, or a third of your account, or even your entire account. And there's nothing worse than that. It's much more worth it to learn to cut the loss, get out of it. If you lose a day trade, that's not the end of the world, and then you'll have more day trades the next week. In my opinion, that's the way to go. Live to trade another day, and you can keep learning, keep your education process going. Other than that, guys, thanks for watching. I hope you took something away. I didn't have a whole lot planned. I just wanted to get something out there, because I know I haven't uploaded in a while. I've been working that full-time job, so hopefully enough. I do want to say we've passed 50 subscribers in less than a month, so that's pretty awesome. That's a milestone. So thank you guys for watching and for subscribing, and I appreciate the love. And I'd appreciate if you share it with some friends. Let me know in the comments what I can do videos on. I'm always looking for ideas on what it is. It's hard to trade for several years and then remember where you were when you first started and how you can best help the people that are first starting. So I'm open to ideas. Stick them down in the comments. Like and subscribe. I got to get out of my job so I can make more videos. If you guys like and subscribe and share this and make this channel big, I can buy my Lamborghini that I want. I can quit my job and trade full time and make YouTube videos. Let's do that, guys. That sounds great. I'd love to shelter in place from my house instead of going to my essential job every day. But anyway, thanks for the love. Talk to you later. Let trading set you free. Nomad out. Peace.